So the landscape around commercial or self-managed super funds is slightly different, and anybody who's ever spoken to a lender would understand that regulatory requirements can be different. Some loans like self-managed super funds are regulated a lot stricter, many more conditions in terms of the types of property and how you manage it and things like that. So it goes without saying that the offset is always going to be very different, if available at all, right? So not every financial institution who offers commercial lending or self-managed super funds are actually going to allow you to have an offset account.
Welcome to the Debt to Financial Freedom podcast. I'm your host, Victor Lagos, and the founder of Lagos Financial. I've been in the finance and lending industry for 16 years, and I've personally made financial mistakes and learned from them. I started this podcast to share stories and lessons on my own journey and to share insights that may help others on their journey. And I interview people that I've connected with that share the same values and mission to help others create financial freedom. Welcome to the Debt to Financial Freedom podcast. I am your host, Victor Lagos. I'm also the founder of Lagos Financial and the co-founder of Propeller. So, today we've got a different type of guest. My guest today is Shelly Medina, and she is the growth manager of Lagos Financial. Welcome, Shelley.
Thanks, Victor. I'm really excited to be here on my first podcast for Lagos Financial.
Yeah, so I guess before we start going into today's, topic, we're going to really cover off a lot about offset accounts because our clients are always asking about offsets. For the listeners, are you able to share your story, in your background in financial services and what led you to work for Lagos?
Yeah, absolutely. Thank you. So my background is retail banking. I spent almost 20 years across a couple of different major banks here in Australia. I've had really diverse roles. I started in a call centre and have worked through into branches and also leading digital banking teams. I've also worked with a professional membership organisation for people in finances and looking after the education of people working at banks. So lots of time in retail banking, lots of customer facing time as well, which is really my passion. What led me to Lagos was actually, I think I like telling people that the reason I actually joined Lagos was because I listened to your first podcast and you talked about your background and your parents. And, it really resonated with me around the importance of what people in financial services do. And how important it is to make sure that you're looking after your clients and doing the right thing by them. So really proud and really happy to be working with you and the team here at Lagos Financial.
Yeah, awesome. Yeah, it's been really great to have you on board. And I want to share, a story from the beginning when you and I caught up in Melbourne and you were telling me how you raised your 3 kids and you taught them about money very early on. And I think I always wanted to share that with the audience because it's something that a lot of parents don't do. And I can relate to that. My parents didn't teach me much about money and I had to figure out on my own. So can you share a little bit about that experience and on the impact that's had to your kids in the later years of their life now?
Yeah, of course. Yeah. My upbringing was very similar. Really hard, working class parents. And I think they tried to protect us from the realities of, their financial situation. So we never really talked about money. And then when I started working in banking, I realized how little I knew about banking, that I didn't really understand the importance of savings, the importance of managing your credit. So I really wanted to instill that in my 3 boys. I wanted to teach them that earning money came with responsibility and with discipline. and that there was a way that you could work really hard but enjoy the money that you had, to create some freedom for yourself and some financial stability. So from the moment the boys started working, we sat down and I said, this is awesome. You're going to have all this money that you can do things with and buy things with. But you have to have a savings plan. You have to put money aside. And so each of the boys, from the moment they've worked, we've sat down and we've done a plan. How much money are you going to save? How much money do you need? Obviously, at 14, your overheads are very high. So you have the ability to save quite a lot. And I think it's wonderful, and so I think that that's part of the reason why at 24, my eldest bought his first home with a 20% deposit, because he understood the discipline and the importance of having savings and thinking about your financial future.
Yeah. No, it's really good that you shared that, and that's pretty impressive at 24 to buy your first property at 20% and not need the bank of mum and dad, not need a guarantor loan, not need LMI and all these things that people get into in order to enter the property market. How long ago was that, by the way?
So Liam did his purchase. It was a house and land package. Couple of years, for the land to title and the house to build and all those sorts of things. So he actually signed the contract at 22 and moved in at the beginning of this year.
Okay, so it wasn't that long ago, which means
No,
there is
no.
hope, all right? Because a lot of the stuff out
Yes,
there is saying that
absolutely.
the current generations can't afford to buy property in Australia anymore, but it is possible with discipline
It is.
and the right
Yeah,
education. And I guess that's why we've come together today, is to really educate our listeners and our customers, because a lot of our customers ask questions about offset accounts. And whilst offset accounts are more applicable if you already have the loan, it's still important for people to understand offsets when they're leading up to saving for their first property, because once they've bought that property and all their savings are exhausted, they obviously want to pay that loan back as fast as possible. So let's start. Let's learn a little bit about offset accounts from your own experience, and then I'm happy to sort of jump in and share my own experiences as well.
yeah, that'd be
So
great.
yeah.
Totally. Yeah, look, totally agree with you. I think offset is something, is a term that everybody's familiar with, everybody's heard it. But I don't think people really understand what it is, or how to use it. And during my time in banking, I saw a lot of people who were missing out on the benefits of using an offset because they weren't quite sure what it was. Um, so I suppose to start with, the first thing to know is that an offset account is basically a transaction account. It sits alongside your home loan, and it's used for you to park your surplus or your savings to help you pay off your home loan sooner. And the way it does that is basically the money that you have in your offset is deducted from the balance of your home loan. So if you have a $300,000 home loan and you have $50,000 in your offset, you're only paying interest on the difference between the two. And what that does is that it helps you pay off your home loan sooner, because over time, the less interest you pay, the more you pay off your principal, because your repayments are used in that way. As I said, it's a transaction account, so you can have a FPOS or debit card linked to it. You can use the money freely, so it's not sitting inside the home loan. You have access to the cash that's in there at any time, and quite often people set up their offset account separate to their everyday transactions, just as part of that, I guess, discipline, of knowing that your offset money is in one account and that's working for you. And then you have your expenses and every day set up in a separate account. Um, There are different types of offsets as well, and that will always depend on the type of home loan you have, the policy of the bank that you're with. Um, there are what's called 100% offset, or a partial offset. And the type of offset you're eligible for will always depend on the type of home loan you have. As I said, different banks have different policies around having an offset. So it's really important, if you know that the offset facility, because that's what's banks refer to it as, a facility, if the offset facility is available on your home loan, that you understand what the terms and conditions of that offset are, and how to use it. Because in some instances, you actually need to request for it to be activated. It's not automatically activated. You might need to fill out a form. You might have to do it at the beginning of your home loan when you sign your loan acceptance paperwork. So just check with your bank or lender to find out what type of offset you have and how you can activate it.
Awesome. You covered off a lot actually on how offsets work. I'm sure a lot of people have experienced offsets but probably don't use them properly. So you mentioned a little bit about if you have an offset account and you have your main account where all your funds are for offset, and you have a separate account for your transactions. Can you explain that a little bit more, and how that could work if you had multiple offsets? So some banks that offer multiple and some that only let you have one offset, how you would kind of, I guess, maximize the benefit on those two different structures?
Yeah, absolutely. I think the first thing to make sure is, if you are going to have multiple offset accounts, again, always check how the banks will manage or activate your offset. Some banks have a cap on how many offset accounts you can have. Some banks will actually have a cap on how much money you can actually offset off your home loan. So before you go setting up multiple offset accounts, just make sure that you've covered those things. So how many offset accounts can you have? Some banks will let you have up to 99 offset accounts. Some banks will only let you have 5. Some banks will charge you a facility fee. So again, check the way your home loan is set up to see whether you're charged for the facility or whether you're charged per account. And then check how much you can offset. Some banks have unlimited offset. Some banks have a maximum amount of, $15,000 or $50,000. So really important to check that before you start opening up accounts and deciding how to set up your finances. The way I used to speak to clients when we spoke about offset was that what you really wanted to do was differentiate or separate that surplus or savings money that you had into one offset. And there's a number of different reasons for doing that. One is you don't want to mix up your savings and your everyday money, right? So you want to really get a clear idea of how much you've got in savings. And sure, you might need to sort of dip into it every so often if something happens or you need extra cash, but that's separate. In the same way that you would have a savings account and you were saving for a holiday, you want to see that balance growing and you want to see that separated from your everyday expenses because you don't want to overspend.
Yeah.
The other reason it's a really good idea to have your offset funds or your offset savings in a separate account is really around security. So remember, your offset account is a transaction account. If you have a card linked to that account and you have $50,000 in that account, and, knock on wood, you were to lose that card, the last thing you want to do is for somebody to be able to access that money. So keeping your offset savings or surplus in a separate account works really well. There's also the psychology of seeing that money and not really wanting to dip into it too much. Because, like any sort of savings goal, it's nice to see that balance increasing. And remembering, like I said, the higher the balance in your offset, depending on how the bank has set it up, the less interest you pay on your home loan. So definitely a good idea. If you're able to have multiple offset accounts, maybe think about having one for every day, one for bills, and one for, the bulk of your savings. That's usually the sorts of suggestions or ideas I used to share with my customers when I was in banking.
Yeah. And what about fees? You touched on some will let you do sort of a facility fee, another would be per account. For obviously, we deal with a lot of banks and different financial institutions. What are the main differences you see when it comes to like a professional package, monthly fees, and annual fees?
Yeah, yeah. So usually when you get a home loan under a package, you get a cluster of different services that you don't pay for separately because you pay one annual fee. So, for example, you might pay $395 a year, and that $395 a year means you don't pay any monthly service fees on your home loan. You might not have to pay for an offset facility. You might get free redraw. You might not have to pay the annual fee on a credit card if it's part of the package. So generally, basic banking is covered under the package. And you might get one free transaction account. I know some banks have, your everyday account where if you deposit $2,000 a month, you don't pay a monthly account keeping fee. You might under the package that might not apply to you, but it might only be for one account. So if you have multiple accounts, you may only get the monthly account keeping fee waived on the first account. So just keep that in mind. If the loan isn't packaged, so if it's, say, a basic home loan, you might not have the offset facility even available on a basic home loan. Or you might have a standard loan where you have an offset facility, but you have to pay a monthly offset fee plus a monthly account keeping fee on the transaction account. So really important to understand the structure of the fee schedules when you're setting up your home loan, and whether it's a package or not unpackaged loan.
Okay. And you mentioned something about a basic, not having offset. So some people might ask the question, um, what's the difference between offset and redraw and the
Mm.
benefits of, I guess, one versus the other?
Yep. Yeah, absolutely. So look, I think as long as it's 100% offset, the benefit of whether the money sits separately in an offset account or whether it sits in your redraw or in your home loan, you're essentially getting the same benefit. I think the biggest difference is accessibility, right? So if you have money in your redraw in your home loan, you have to draw the money out of your home loan, put it into a transaction account, and then be able to use that money. So that's, one difference. Whereas in an offset account, the money's already sitting in your transaction account. I think the other difference as well is technically in the redraw, and I know you and I spoke about this a little bit. The money actually is the bank's money when it's in a redraw. And many years ago, there was a financial institution who decided that they were going to call in the money in the redraw accounts for their customers. And it caused a lot of issues because there were people who were putting all their surplus funds into the redraws for, just in case, for emergencies, even for things like renovations of the house. So just keep in mind, in your transaction account, that's an offset account, accessibility, that those funds are yours to do with as you will. In the redraw, it's a little bit more limited around what you can do and how you can access those funds.
Yeah. Yeah, awesome. I want to add to that a little bit just because we deal a lot with investors and some people don't actually understand the implications of using redraw when it comes to investment as well. So I'll just explain from my experience and also what I help with our investors to learn about is that you're right, when you put the money into the loan, it's the bank's money. Um, but it also means that when you're redrawing it, you're actually that's exactly what it means. You're drawing it out again. So you're reborrowing the money. That's why we're saying it's the bank's money. So What that means is that if you have intent to ever convert your home, your principal place of residence, into an investment property, you can't claim the interest up to the original loan limit anymore once you put money into the loan and redrawn it out, because there's now a paper trail that says you've paid that money back and now you've gone and used it again. So therefore, you technically only owe against that property what you paid it down to. So hypothetically, if you owed 500,000 and you accumulated 100,000, if you put that money into offset, your loan balance will still be 500,000. You'll just be paying interest on 400. But if you put that 100,000 into the loan, you'll have 100,000 available, assuming the bank lets you access it, and your balance will be 400,000. So if you then converted it to an investment and said, oh, I want to claim interest on 500,000, you can't anymore. You can only claim it against 400. So that's something to keep in mind for investors if you ever want to know the benefits of offset and if it's worthwhile paying for. I guess the other one bit I wanted to ask you was about, for investors specifically, if they have an interest-only loan and they have an offset account, how can that benefit them, especially when it comes to
Yeah.
growing their wealth and accessing equity?
Yeah, look, I think that that's really interesting. And I think it's really interesting that the benefits of an offset account are different for your principal place of residence, so your home, versus an investment property, right? So it's, again, checking to make sure that you understand how the offset works is really important. In terms of the difference of an interest only loan, having those funds separate in an offset account is still minimizing the interest you're paying on an investment interest only. So, and I think this is something that you could probably clarify as well. I know that investors quite often have equal balances. So the balance of the home loan is equal to the balance of the offset account, and therefore they're not paying any interest. Accessibility to those funds is there for them to use for whatever purposes they want. So that's essentially, the sort of benefit that an investor could get. Keeping in mind, I guess, things like whether, in terms of what your tax benefits are, and whether you are, I can't think of the word, and I have an investment property and I can't think of the word in terms of paying less tax. Um,
Negative gearing?
Negative
No.
gearing, that's it. Thank you. So keeping in mind around, that the interest you pay on your home loan can be used if you're negative gearing. So just keep that in mind as well, and talk to your accountant about how to best use your offset account if you have an investment property. I think you could probably add a lot more to that, Victor.
Yeah, I guess what I wanted to sort of touch on around interest only with an offset versus principal and interest with an offset. So if you have a loan that's P&I, or principal and interest, the expectation is that you make a repayment every single month, which essentially reduces the loan limit, or what's called amortization. It means that the loan is being paid back over a period of time. And if you borrow that money as an equity release, meaning that you're accessing cash, but you're not needing to use the funds straight away, even if you put the funds, if the loan was P&I and you put it in your offset account, the bank will still expect you to make principal and interest repayments, even if the principal is technically zero, if it was in the loan, right? Because say you borrowed 100,000 and you put them 100,000 in offset, technically you owe zero, right? But by having principal and interest repayments, the bank will expect you to make P&I repayments on 100,000. So, and a lot of people get stuck with that, saying, why am I making payments to a balance that I don't even have? Well, again, this comes down to the fact that you still owe 100K, but the money's sitting in offset, so that's your money. But by having the loan as interest only, and and it has to be a bank that has enough systems or good systems that can identify the fact that it's a true interest only loan. 100K interest only, 100K in offset, therefore interest is zero, therefore repayments are zero. So that way you can have access to your money without having to come up with any repayments or affect your cash flow. Because what can happen is, I think people who constantly have to pay for something that they're not using eventually say, I'm just going to close this thing. It's taking out money out of my account and I don't even use the money. But if it's not doing anything, at least it's there as a buffer, or it could be also preparing you for the next investment purchase when you are ready. Give you time to do your research and your structuring and your planning before you go and spend the funds, and at least you have access to it in the offset account.
Yeah. Yeah, I think that that's a really important point to make, that offset on a P&I or principal and interest home loan won't change your repayment amounts, right? So yes, you'll be paying less interest, excuse me, on the home loan, but the bank has calculated your repayments based on the fact that this loan will be paid off by 30 years or 25 years. So your repayment amounts are going to be the same. Offset doesn't change that unless, to your point, you have an interest-only loan, and therefore the interest on the loan is going to fluctuate based on how much you've got sitting in your offset.
Yeah, exactly. It's explained really, really well. And I guess one of the other things we want to understand is around the benefits of having regular contributions and, I guess, minimum um, uh, withdrawals. Can you explain that a little bit, and I guess what implications or impacts that has to the borrower or the investor?
Yeah, yeah. So, you know, essentially, most people want to pay off their home loan sooner, right? So the idea is that the more you contribute towards this debt, the faster it will be paid off. The benefit of making those regular deposits into an offset, or having a high balance in the offset, is that idea that the less interest you pay, the more you're actually able to take off the debt or the principal of the loan. Most loans, the banks calculate interest on a daily cycle, and then debit or charge the interest to the home loan on what's called the payday of your home loan. The payday of your home loan is generally set based on the day that you settled the loan. So if you settled your loan on the 18th of the month, then that's the payday. Some banks do it on a calendar a month, but essentially the majority of banks will calculate interest on a day-by-day basis. So throughout the month, if you're increasing the balance of your offset, or you're minimizing how much money you take out of the offset, at the end of that cycle, the interest that you will pay on the home loan for that month is always going to be less. And that's essentially what you want. You want to reduce the interest charges on your home loan.
Yeah, you've explained that really well. When I used to work for a non-bank lender in customer service about 18 years ago, this question would come up a lot. And the way I would explain that is interest accrues daily, but it charges monthly. So I guess just to add on to elaborate what that means is, every single day, interest is kind of like adding up, but you just don't see it on your bank account or on your loan or on your statement. But it's in the background. So it's accumulating or accruing. And then at the end of that cycle, it would charge to the loan. And at the same time, a repayment is required, whether it's interest only or P&I. So to your point, if you're making additional contributions or extra repayments into the offset more regularly, that accrual, instead of going up and up and up, if you put money in, it drops down a little bit, right? And it goes down, then you put
Yeah,
another one, it drops a little bit further. But if you wait till the end of the month, it was accruing on a higher amount, right? That whole month. So if you can bring it
exactly.
down, it will accrue a little bit less. And then
Yeah,
I guess what happens is, because the interest is less that month, but your repayment is still the same, if it's P&I, you end up paying the loan off faster, because the repayments
exactly.
were originally calculated under the assumption that you were not making any extra payments or any offset.
Exactly right.
That's how it works.
Yeah, exactly right. Yeah.
Cool.
Yeah.
And I'm going to ask a little bit about offset accounts for commercial loans, because a lot of our clients are commercial investors, and some of them would like offset. From your experience in our clients, what do you tell them when it comes to offset accounts for commercial loans?
So the landscape around commercial or self-managed super funds, it is slightly different, and anybody who's ever spoken to a lender would understand that regulatory requirements can be different. These some loans like self-managed super funds are regulated a lot stricter, much more, many more conditions in terms of the types of property and how you manage it and things like that. So it goes without saying that the offset is always going to be very different, if available at all, right? So not every financial institution who offers commercial lending or self-managed super funds are actually going to allow you to have an offset account. I'm still in my learning phase in terms of the commercial and the self-managed super funds. And I know you and I have spoken a little bit about this in terms of the types of offsets that you can have. I believe in the commercial lending space, it's not really an option. And then in the self-managed super funds, it is, but it's also restricted around how you can use it. And the flexibility is a lot less in terms of those financial institutions that can offer it or do offer it. But I'd probably ask you to elaborate a little bit more on that, Victor.
Yeah, so I guess for commercial, the way I look at it personally is that, you know, it is commercial in nature, right? So commercial meaning that, everyone is in it to make money. And offset accounts, to my knowledge, were actually introduced by the Financial Planners Association back in the 90s, and it was literally to help the consumers. So banks eventually conformed, and they had to introduce them and allow for them. But if you think about it, if you use an offset properly, it doesn't benefit the bank at all, actually, because you're paying the loan off faster and they're earning less interest. And for mum and dads and consumers who are none the wiser, um, you know, they don't want to be taken advantage of. So that's what these measures are in place to protect them. And it's not really discussed in a fact of, we're here to make money from you, right? It's more, we're here to help you to buy your home and provide for your
Mm.
family. But once you jump into the commercial side, it's very clear you're doing this to make money, and so is the bank. So why would they be in a rush to offer things that mean they make less money, right? And it also doesn't make much sense for you as I guess, as an investor or a business owner to be reducing the interest on your commercial loans if they are tax deductible, whilst you still have non-deductible debt, such as your owner-occupied home. So that should be the priority, right? So it doesn't mean you can't have them. It's just most banks don't offer them. Um, we do have a major bank that does, but it is restrictive to full doc lending, not lease doc, and the LVR is capped at 65%. That's a major bank, and a couple of the non-banks offer them as well, but they are restrictive. You need to ask the question up front. You can't expect that you can just add it whenever you want. If you don't ask for it at the beginning, you miss your chance. And then when it comes to SMSF, yeah, most lenders don't offer it for SMSF loans, but the ones that do, it's called an e-offset. And an e-offset essentially means electronic offset. So it's not like you have a card that you can access the money, like a debit card, and you need to get permission each time you withdraw the funds, because they can only go to one account, and that is your cash management account for the super fund. So it can be beneficial to have an offset for an SMSF loan, because you're making regular contributions. You might make extra contributions if that's what your accountant or financial advisor suggests. However, if you don't have an offset and you put that directly into your SMSF loan, then you may not be able to withdraw those funds anymore. They're gone. But you might need them because hypothetically you might be out of a job for a period of time and you're not having any super contributions during that time. Or you want to buy another property, and therefore having access to those extra funds can be beneficial for you to have an offset. So when you have a chat to Shelley at Lagos Financial, I'm sure she'll be able to explain that in a bit more detail. And yes, that should cover that up.
Yeah, look, I think it's really important to, particularly in as an investor, so and depending on how you've structured your loan, to have a conversation with your accountant. As I said, self-managed super funds are highly regulated anyway, as is any type of superannuation fund, really. So how you manage it, how you put money into it, whether you can take money out of it, is all going to be dependent on those regulatory requirements. So really important. And because offset is technically surplus cash, you want to be making sure that you're using that surplus cash to benefit you and you're thinking about the structure. I think the point that you made about, if you were ever out of a job and you weren't contributing to your self-managed super fund because of that, how would the self-managed super fund make the repayments on the loan? That's a really important thing to think about. Again, surplus cash. Always think about what is the right strategy for you and how best to use it.
Yeah, agreed. All right, so I think we're getting close to wrapping up, but I do want to just cover off a couple more things just at the end. Here is I guess it's a bit of a hack, and that is if you're self-employed and you have a company and you don't need your funds, your basically retained profits or working capital, you can actually put those funds into your personal offset account. And as long as you return those funds into your company account by the end of financial year, so 30th of June, and it's dollar for dollar. So hypothetically, you took out 100,000 and then you put it back before that. It's not considered a director's loan and it's not considered a Division 7A loan. So it's like it never happened. So, and I just got a calculator in front of me. So if you owed 800,000 on your loan, on your home loan, and the rate was say 6.24%, just by having $100,000 in your offset account, if you were able to do that year on year, you would actually pay the loan off in 23 years instead of 30 years. So you're knocking off close to about 7 years. So that's an interest saving of just under $400,000 that you'll actually save just by doing this. Yeah, people don't realize what impact it actually has. Of course, being able to offset that much for that long, it's not available it's not as easy for everyone. But I mean, even if you say it was 50,000, let's see what that looks like. That's nearly 4 years you're knocking off, and you're still saving $228,000 in interest. So, as you can see, guys, an offset account can be very, very beneficial if you do it properly. But there's a lot of intricacies around it, and when you get in touch with Shelley at Lagos Financial, she'll be able to answer all of your questions and go into a bit more detail. And then, of course, I'm always available to answer things that she's still learning. But I also wanted to sort of mention you guys that we're actually going to be launching a new channel specifically for Lagos Financial. So make sure you hit subscribe. The link is going to be in the show notes and in the description. And we're going to be going into more and more detail around these common questions that we get for our clients.
Yeah.
Thanks, Shelley. Really appreciate your time.
Thank you so much, Victor. It was really good to have this chat. I always love talking, home loans and banking. So thank you so much. And I look forward to our next chat.
Yeah, me too. All right. Thanks, guys. Thanks for listening.
Thanks. Bye.
Cheers.